Welcome to the weekly market recap. Today is Saturday, August 15th, 2026. What a wild and wildly profitable ride in the stock market this week. The bulls kept their foot firmly on the gas pedal as the S&P 500 SPY notched a plus 0.36% gain, and the small cap Russell 2000 IWM flexed its muscles with a plus 1.1% surge, both charging to fresh all-time highs before taking a tiny breath on Friday. The tech-heavy NASDAQ 100 QQQ joined the party with a plus 0.14% gain. Second quarter corporate earnings continued to blow the roof off expectations, with an astonishing 87% of S&P 500 companies beating bottom-line estimates, fueled by massive non-stop spending on AI infrastructure. Friday saw a minor pullback as cooler retail sales and rising crude oil prices rattled a few nerves. But overall, this summer market melt-up is alive. Taking a peek under the hood at sector performance, energy was the undisputed heavyweight champion of the week, exploding plus 7.57% higher as crude oil prices surged back over $82 per barrel amid escalating geopolitical friction in the Middle East. Communication services took the silver medal with a solid plus 1.47% gain as big tech media names stayed bid. On the downside, consumer cyclicals took a punch to the gut, dropping minus 1.76% as shoppers cooled their retail spending, while basic materials slipped minus 0.51%. Our trusty CNN Fear Greed Index is sitting right at 65, putting us squarely in greed territory. Investors are clearly hungry for gains and chasing performance, but keep one eye open. When greed stays elevated while long-term bond yields creep higher, late summer market volatility can sneak up fast. Our top macro story of the week is the monster Q2 earnings season that continues to crush Wall Street expectations. Over 455 S&P 500 companies have reported so far, with 87% beating earnings estimates and overall EPS growth tracking at an astonishing 50% year over year. The primary driver, big tech hyperscalers and global enterprises dropping endless capital into AI chips, data centers, and enterprise software. Coming in as our second biggest story, the American consumer is showing clear signs of exhaustion. July retail sales came in weaker than expected, and the University of Michigan Consumer Sentiment Index tumbled to 51.0 in August, missing forecasts of 55.0. One-year inflation expectations ticked back up to 4.3%, proving that higher everyday prices are still squeezing household budgets. For Wall Street, this soft data is a double-edged sword. It boosts expectations for Federal Reserve rate cuts, but raises questions about overall economic growth. Rounding out our macro top three, long-term borrowing costs sent a shockwave through the bond market. A lukewarm 30-year U.S. Treasury auction pushed yields up to 5.216%, hitting a 25-year high as markets absorb heavy national debt issuance. To add fuel to the fire, West Texas Intermediate crude oil leaped nearly 7% to $82.43 per barrel on Middle East tensions. Spiking yields and sticky energy prices are two critical macro risks that every trader must watch heading into September. Heading up our S&P 500 movers, Supermicrocomputer exploded, higher with a breathtaking plus 33.3% weekly gain. SMCI reclaimed its throne as the premier AI server play after management delivered reassuring commentary around liquid cooling rack production and skyrocketing server demand. Short sellers were caught completely flat-footed as the stock staged a monster short squeeze. If you've been riding this rocket, make sure you're trailing those stop losses. Next up among our top gainers, enterprise cloud star Workday surged plus 21.3% for the week, including a massive single-day pop of nearly 18%. Workday blew past Q2 subscription revenue expectations and raised its full-year operating margin guidance, proving that enterprise AI integrations are translating into serious top-line growth. Analysts rushed to slap higher price targets on WD8Y, making it one of the cleanest earnings breakouts of the week. On the loser side of the ledger, legacy tech giant Cisco Systems took a heavy hit, dropping minus 8.4% for the week. Although Cisco managed to match quarterly earnings estimates, Wall Street was deeply disappointed by its weaker than expected forward revenue guidance and sluggish hardware demand outside of core AI networking. In a market that demands perfection, even a small stumble on guidance was enough to trigger an aggressive sell-off. Moving over to the small cap arena where the Russell 2000 stole the show, Eton Pharmaceuticals took center stage with an incredible plus 44.2% weekly surge. Eton caught fire after announcing strong commercial sales momentum for its rare disease drug portfolio alongside critical FDA regulatory wins. Small cap healthcare and biotech names have been desperate for momentum, and Eton delivered an absolute clinic in commercial execution. Our second top small cap gainer was Applied Optoelectronics, which ripped plus 15.5% higher on massive trading volume. AOI continues to ride the immense wave of demand for high-speed optical transceivers needed in AI data center buildouts. As major cloud providers double down on network bandwidth, small-cap component suppliers like AOI are reaping the rewards of record order backlogs. On the loser side for small caps, language learning fan favorite Duolingo slipped minus 7.8% over the week. Despite reporting solid user growth numbers, management's forward monetization guidance fell just short of the sky-high expectations baked into the stock price. Traders used the earnings report as an excuse to lock in profits, proving that even high-growth tech darlings can get pulled down in a choppy environment. Let me break down the weekly chart, starting with SPY. SPY closed the week around $578, index 7,785, coming off brand new record highs. On the weekly time frame, major overhead resistance sits at $582. If bulls can punch through $582, the next upside projection is $588. On the downside, immediate support rests at $570, with key structural support at the 20-day moving average near $562. As long as SPY holds above $570, the macro uptrend remains firmly in control. Turning to the tech behemoth QQQ, price action closed around $490. QQQ is currently testing a massive resistance zone between 498 agents and the $500 psychological barrier. A clean weekly close above $500 opens the floodgates for a push toward $510. However, if tech momentum stalls, watch initial support at $482, followed by a stronger demand floor at $472. Small caps have been total rock stars lately. IWM closed the week at $220 after testing fresh 52-week highs. Overhead resistance sits right at $224 to $225 DAS, representing a critical multi-year breakout level. If IWM can clear $225 on volume, expect an expansion move toward $235 DAS. On any pullbacks, initial support sits at $215, with rock-solid buyers defending $208. Switching gears to the crypto market, Bitcoin had a trickier week, slipping below $63,000 to trade around 62,500. BTC is hovering near the midpoint of its two-month consolidation range between $58,000 and $67,000. Key overhead resistance sits at $65,000, and bulls need to reclaim that zone to ignite a run back toward $68,000. On the downside, $62,000 is immediate support, but the big level everyone is watching is $58,000, a major yearly demand zone that bulls must defend. Ethereum followed Bitcoin's lead, losing the $1,900 level to trade near $1,875. ETH remains locked in a tight range, with heavy resistance waiting at $2,000 and $2,120. Until ETH can reclaim $2,000 on strong volume, upside moves will likely remain capped. Immediate support sits right here at $1,850, with a deeper safety net sitting at $1,750. The broader altcoin market felt the pressure this week as total crypto market cap drifted lower alongside Bitcoin. Major caps like Solana, SOL, XRP, and BNB all posted minor weekly losses between 0.5% and 3%. With Bitcoin dominance remaining elevated, altcoins are mostly trapped in range-bound accumulation patterns. Traders are waiting for a clear Bitcoin breakout before making aggressive altcoin plays. Wrapping up the week overall, market sentiment remains cautiously bullish. Corporate earnings beats and AI tailwinds are providing a powerful floor for equities, but rising 30-year bond yields, sticky energy inflation, and late August seasonal weakness mean we shouldn't get overly greedy. Expect a stock picker's market with choppy, range-bound price action. Looking ahead to next week, all eyes on Wall Street will turn to the major retail earnings wave. We get quarterly results from retail giants including Home Depot, HD, Target, TGT, Lowe's, Walmart, WMT, and Deere & Co, DE. These reports will give us crucial clues about consumer health and spending power. Plus, keep an eye out for Federal Reserve speeches midweek for hints on monetary policy. That is your weekly market recap. If you enjoyed this breakdown and want to stay ahead of the markets every single week, hit that like button, smash subscribe, and drop a comment down below with your top stock pick for next week. Thanks for watching and happy trading.